Hello and welcome to this tax update, brought to you by Tax Essentials for Advisors. I'm your host Andy Rainford. This week we've got a reminder not to use clients' login credentials for Government Gateway, news of a second tranche of letters about business asset disposal relief, and the conclusion of a long-running case regarding employment status and football referees. So first up, a survey has revealed that 58% of authorised agents have used their clients' Government Gateway credentials to access the tax account. It's likely that this is a tactic used where problems have arisen trying to file returns via commercial software, or where the agent requires information but the client is unsure where to find it online. It's very important not to ask clients to share their login credentials in this way, as it is considered a breach of HMRC's standard for agents. This could lead to sanctions, including suspension of the tax advisor registration for all clients. Next, we have the news that the legislation giving the government the power to make pension contributions available to via salaries related to income tax, subject to national insurance tax, has received trust registration service. This is not the primary inheritance tax itself, the existing number, and we're still unsure of exactly how the cap is going to work in practice. It's likely that there will be a consultation, so hopefully things will become clearer over the next year or so. As the changes don't come in until April 2029, there is still plenty of time. Up next is a reminder that the corporation tax late filing penalty regime has been updated. Broadly, all penalties for late filing have doubled from the previous level with effect from April 2026. There is currently a temporary pause on some automated notices, but HMRC expects the system to be fully operational by the end of June. This will be where it is likely that enforcement activity will increase. A second wave of one-to-many letters is being sent out to taxpayers that claimed business asset disposal relief on the 2024-25 tax return. The issue relates to taxpayers that HMRC believes have already exceeded their lifetime allowance. If you receive a letter in respect of this for one of your clients, you will need to check the historic disposals and claims and amend the return if necessary. Doing so will avoid the need for an inquiry and possible penalties. Just the one case this week, but it is an important one. A group of football referees have successfully argued that they are not employees for employment status purposes. The referees operated through a limited company. The tribunal agreed with the group that the level of control exercised over the individuals was insufficient to create an employment relationship. There was no obligation for the company to provide work or for the individuals to accept it. The case is a reminder that employment status is fiendishly complicated, and while there are success stories for the taxpayer, it is important to apply the three-stage test surrounding control, mutuality of obligation, and the practical reality of the relationship. What the contract stipulates is far less important than what is actually happening in practice. That's it for another tax update. Thank you for joining me, and I will see you again in a couple of weeks.
Thanks, Andy, and just a reminder that our next CPD webinar will take place on the 17th of June at 1 p.m, and we will be joined by Ed Thompson, who will be talking about VAT planning using the option to tax election. We'll have registration instructions for you shortly.